Yeah, I'd be smiling too if my company just made $9 billion in trading revenue this quarter. So, how was that related to these things over here? Well, it's inflationary. And I'm going to explain to you guys how corporate earnings, especially on the banking side, might be good news for investors, but not very good news for mortgage rates. So if you're watching this video, most likely you're trying to figure out what's going on with these. Today, I'm going to help explain to you guys the whys behind it. So here's the breaking news that we had today. JP Morgan Chase, they just topped their revenue streams on their trading revenue by $9 billion. They brought in $9 billion in trading revenue. That is a record. Okay, Goldman Sachs down through here, they also beat estimates. Why am I concerned with this? Well, here's the problem with this is those portfolio revenue streams, let me get my head out of the way, they're pushing up the inflation numbers. So here, let's break this down. The price index for portfolio management and investment advice services has increased around 12% over the past year. How many other corporations have increased their bottom line by 12%? And it contributes around 0.2 percentage points to the core PCE. Now, what's the core PCE? Well, that's the number one inflation number that the Federal Reserve monitors. So let's take a little bit of a deep dive into this. Now, this is that number, the inflation number that everybody's saying, okay, it's going to go to 3%, and then the markets are going to react to that and accordingly. Well, the tariffs that came in back in March or April, they increased the PCE number from about 2.3 or 2.4 to 2.7. It's 0.3 increase. And I was calling that on the inflation front. What I wasn't expecting is the trading revenue from a lot of these trading desks to increase also the PCE number by another 0.2. So could we get to 3% soon? Well, we could. And if you hit a 3% on the PCE number, you're going to see the Federal Reserve get a little bit shy on those rate cuts. That's the problem we have right now. So corporate profits, they're fantastic for investors, but they might not be good news for the mortgage rates. So let's get over and see how the mortgage rates are reacting today. So to do that, we go over to the MBS market. We don't really, have mortgage rates to post each day because we don't really follow those. What we do is we follow the mortgage market or the mortgage bonds to give you a direction of exactly what's going on. So here's what happened last week, and here was my concern. I came in last night and said mortgage rates are probably going to open up higher today because of this rate through here. Here's the chart that we saw over the last 5 trading days. We had last week is President Trump tweeted and sent the markets, the stock market kind of tumbling on Friday, but got mortgage rates a lot better. And that's what happened right through here. Okay, but my concern was I thought the gap would get filled in through here based on the news that we got out over the last few days. We had China, and that settled down just a little bit, and some other things. We also had the Middle East. A lot of the issues over there have been resolved, and we even have Russia-Ukraine might be on a resolution there. So my expectations were this morning that the MBS market would drop all the way down to here. Well, when I opened the opening bell, it was actually up, and it's teetered down just a little bit. So we're only down 0.03 today, so we're really not going to see any adjustments with mortgage rates. That's good news for today when it comes to rates, because I thought the market would open down here, and again, as the MBS market goes down, rates go up. So that was fantastic news that we have so far. You go over to corporate earnings and we take a look at these. We haven't looked at them in a while because now we have a slew of a lot of banking earnings coming in, and that's going to give us the direction of where the consumer is. Well, today we had JP Morgan Chase, Citibank, and a lot of other companies come in with their revenue streams. If you look over my head, this is the earnings reports of all these companies today. Okay, all these companies, basically every one of them matched or exceeded the expectations on earnings per share, the same thing on their revenue. So it looks like corporations right now, especially on the financial services side, is doing very well. The rest of the week, we're also going to get things like Charles Schwab, a lot of additional financials. This week, it is a big week for finances. So we're going to focus in on this. I'll give you directions on where others are coming in throughout the rest of the week. Go to the economic calendar. It doesn't give us any direction because here's the data that we're looking at. Today we have Federal Chairman Powell speaking, and that usually scares me because I don't know what he's going to say. Then Thursday, we were supposed to get the Philly Fed Manufacturing Index. Not going to get it. The government's closed. PPI, which is producer inflation, not going to get it. Retail sales, not going to get it. We're not going to get anything, basically. So we have to find those pivot points, or at least that data points that we can extract to figure out where the markets are going to take us, especially when it comes to these things over through here. So that's that piece of the equation. You go to the Fed Watch tool. The Federal Reserve, what are they supposed to do in 15 days? These numbers are getting even a little more exciting. You go down through here, the probabilities of rate cuts coming down the pike. Well, in October, there is a 98% chance they're going to cut rates. Here's the good news is, at the December meeting, there's also a 97% chance they're going to cut then. But there's a lot of data kind of going to come in between now and then. So make sure you subscribe to my channel, so you can check out every video we do to figure out where in the heck mortgage rates are going from here, folks. So last but not least, let's get over to my website. If you want to track these, the opening bell and the closing bell each day, just go to my website and hit resources. You can go down to blogs, and here's what you're going to get. Today, we just posted the rate update for October 14th. Stocks up, bonds downs. What's next for mortgage rates? So follow along with that. Also, today, we will have Stock Talk Tuesday, where we're going to talk stocks, bonds, cryptocurrencies. We're going to talk, is there a bubble? Or is it an opportunity that you're seeing right through here? Kind of the same thing that you had with housing. So we're going to talk stocks today. And is there an opportunity in front of us? Or should you start depleting your assets a little bit, take a little bit off the table? Might be a little surprised on my answer today. But so far today, we're looking at mortgage rates. They're probably most likely going to be steady. That is good news based on where we've been over the last few days. So join me later this afternoon on Stock Talk Tuesday, or I will be back at the closing bell to let you know how this mess ends for the day. Thanks for watching. See you next time. Bye-bye.